In today's video, we're going to be talking about the reaccumulation phase that Bitcoin is transitioning into, and it's right on schedule based on the 2020 cycle, based on the 2016 cycle, and we'll be talking about how the Pi cycle indicator is playing into those historically recurring tendencies, really repeating and really playing out right now. So let's talk about this reaccumulation phase in a lot more detail. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. It is just over 2 weeks until the next halving, and historically around this time we tend to see, at least looking at 2020, we tend to see the beginning of the pre-halving phase, the pre-halving retrace phase, which is where Bitcoin tends to pull back. 14 days before the 2020 halving, we saw 19% downside, and in 2016 we saw 28 days before the halving. This is where that pre-halving retrace occurred, and it took about 29% towards the downside. But if you look at this downside wick, that's 40%. And I'm saying, or at least I said in the previous video, that we're not going to see a 40% downside. We're probably going to stay around the 18%, 20% region. If we're lucky, we get 25%, getting us closer to this 29% in 2016. But generally, we're very, very close to the pre-halving retrace bottom, if not slowly going to get there. For instance, if we were to reject from this range high of the reaccumulation range and then fake breakdown below it, like we did, for instance, here, or like we did over here, or even over here, if we fake breakdown below this range low, that would probably be the very bottom of this last pre-halving retrace phase, provided that we haven't seen the bottom yet. And it's unclear if we've seen the bottom, but having said that, really important to understand that there is still scope for a bit more downside, but it isn't a guarantee. And when we talk about downside in the pre-halving retrace period, in 2020 we had the pre-halving retrace bottom before the halving, as you can see here. But in 2016 it took for that pre-halving retrace bottom to occur after the halving. So that's why I don't want to jump to conclusions about this pre-halving retrace bottom being in already. And the main point, that's the most important thing, is that this pre-halving retrace is all about setting up the next phase in the cycle, and that's the reaccumulation phase. As this 2020 retrace, pre-halving retrace occurred, it did set up this reaccumulation phase in the same way that this 2016 pre-halving retrace, whether it's through the downside wick or whether it's these candle bodies, whether you're looking at it from a conservative point of view, 29%, or a more volatile point of view of 40%, the general gist is that the pre-halving retrace set up this reaccumulation range, right? So it doesn't necessarily where exactly is the bottom, but more trying to locate these ranges, because if you can locate these ranges, you can easily dollar cost average into those, and the better moments to dollar cost average into those ranges is of course near the bottom and allowing for any downside wicks below the bottom of this range. So the fact that we have approximately determined where this reaccumulation range is occurring right now, that's really going to help with reaccumulating and dollar cost averaging into the market, because we have to understand that these two phases are the prime opportunities for Bitcoin. These are the last two phases that offer bargain buying opportunities before we embark on a post-halving parabolic rally to new all-time highs and beyond. So if we want to catch that train, we have to strategically position ourselves and make the most of these two phases. And we know that this pre-halving rally phase is in progress, slowly transitioning into this reaccumulation phase. So we are in a transitional period here between these two phases until we definitely reach this phase, because with that recent rejection from 70k, this pre-halving rally looks like it's pretty much over right now. So we are in the transition phase from pre-halving retrace period to the reaccumulation phase, and with this recent rejection from 70k, it looks like we have the top of this reaccumulation range set in stone pretty much. Now that just gives us the only question mark left: where is the bottom of this reaccumulation range? And of course, this downside wick has given us an idea that it is going to be at 60k or so. So does this continue to act as the base for our reaccumulation period? Very similar to what we saw in the 2020 period, although we did see, if we zoom in here, downside wicking below here and then candle bodies forming, and we actually didn't go to take out those lows. Whereas if you focus, for example, on 2016, we downside wicked right over here, right? But we actually continued towards the downside. So we are getting conflicting signals, because the pre-halving retrace was over by the time of the halving in 2020, but in 2016 it still took 4 weeks after the halving for Bitcoin to find its bottom on that pre-halving retrace. So the pre-halving retrace here began before the halving and then stretched over into the post-halving period. So very difficult to right now just say this is the bottom. Let's approach it more in a level-headed way and see if we can get a bit more of an opportunity here. So I'm not going to be buying at these highs because that's near the top of the reaccumulation range. What I would like to get is more of a dollar cost averaging buy order closer to this reaccumulation range and definitely below it. And I don't think we're going to break down from here. I do feel that if we were to see some sort of fake down price action, it would be to fake us out of the opportunities, or at least the positions we already have, before reverting back towards the upside. It's happened many times in these reaccumulation ranges, and I don't think we're going to see a breakdown from this one, but we are going to get teased and we're going to get threatened with a breakdown. That's something to really take into account. So the fact that we have this reaccumulation range high already in the books is in large part down to the Pi cycle top indicator. This is the 350-day moving average multiplied by 2, this green moving average. And if you look across time, even in as early as the previous cycle, you can see that this is just reaccumulation at those highs, rejection here. And so the fact that we're seeing that right now isn't out of the ordinary. And this was in a halving year, this is in a halving year, whereas this here was in a pre-halving year. Very different positioning in the halving cycle, so we can't compare those. The fact that we're seeing a reaccumulation range form here, and we're seeing one develop right now, right over here, that is really just adding a bit more legitimacy to the Pi cycle moving average, acting as resistance for the time being, but ultimately forcing that reaccumulation phase to occur. In previous cycles, we saw real rejections from here, really rejecting price quite a lot. And even earlier than that, we saw in 2013 overextension beyond here and then pulling back. This is just giving us insight into the fact that this moving average is going to force a reaccumulation range. If it forces additional downside, that's going to be that last bargain buying opportunity. Just going back to what I've been talking about, these are the two bargain buying opportunities to really focus on. And the fact that this reaccumulation range high is confluent resistance with the Pi cycle moving average, any downside that it prompts, whether it's just to the reaccumulation range low, whether it's even below then just to fake us out, whatever downside we get here, that is really just going to be one of those final golden opportunities before we enter was essentially the last phase in the halving cycle, the post-halving parabolic upside phase. That occurs many weeks or even months after the reaccumulation phase, and you can see a portion of this parabolic upside phase in this cycle as well. So we're currently in between these two phases in a transitional period of some sort, but we're firmly going to transition into the reaccumulation phase once we pass beyond the halving, and we're already consolidating around these highs for approximately already 1 month. So with only 2 weeks away from the halving, it's still going to be a likelihood that we're going to see additional consolidation, maybe even to lower levels in the range, but generally speaking, this is going to add to the deceleration that we've been seeing in the cycle, because this of course was acceleration in this cycle. Now we're just seeing slowing down and deceleration in the cycle as we're seeing mean reversion occur, and I spoke about this in the previous video, so check that one out in the top right hand corner video. Subscribe for more videos like this in the future. Like this video if you enjoyed this content going forward. I'm Rekt Capital. Thank you so much for watching, and I'll speak to you in the next one. Speak to you soon.